Oh, okay, there we go. All right, so this is going to be the start of the crypto price action analysis and techniques. Sorry, I forgot to record, but now we're recording. So we do have some objectives on the screen. I'll just let you guys read those again, and then we'll move on. Okay, so jumping right into the price action basics. This is essentially what price does over a long period of time. This is a slightly blurry image. I couldn't refine this any better than how it is. But essentially what you have is this black line, which represents the price of anything that you buy. And then this red and purple line kind of represent moving averages. And for those of you that are familiar with charting, moving averages are relatively common in charting practice. But what you have is you have price kind of slowly going up, basing and continuing its upward momentum until it gets to that point of extension, and then you have it doing the exact same thing back down, and you have this long kind of cycle over and over and over again where this continues to happen with various different assets and whatever it may be. It's very clean, it's very easy to identify. It's a standard cycle of price action where you're not looking to capture the entire move out of something like this. You're really just trying to find the best opportunities for yourself and for your risk management that allows you to get into these closer to over here on this right side as opposed to somewhere on the way down. And we're going to talk about how to identify that type of stuff today. So here's a pretty good example of exactly that, right? Here's the example of somebody who created this image online, and then here's an example of it going on with BNB, the Binance coin. So you can see you have this kind of exhaustion over here on the left side, and then as time goes on, you get those base that it kind of bases out, moves sideways, and breaks down. Bases out, moves sideways, and breaks down. And then you have that kind of extension where it is extended well past all of its moving averages. It's stretched very far away, where then it's no longer advantageous to be short, and now buyers start to step in because they recognize, hey, wait a minute, we might be a little bit extended here. And then you kind of start to get this recuperation, right? It starts to come back into those moving averages, pops above, and then you have those more traditional type of technical analysis structures. You have your bases and break upwards, your flags, right, on a number of different time frames. You can see this is the daily chart, but if you were to zoom in on some of these smaller ones, you would see that on the hourly, on the 5 minute, on whatever it may be. And these are important to pay attention to, because if you can identify this type of structure early on in your trading, right? If you're looking for a cycle of when one's going to start, and you start to see supportive volume coming in at the bottom, as well as price and the structure really starting to firm up, you're getting better triangles, you're getting better wedges, you're getting moving averages kind of moving together and congruently. That's when you're going to find your best entries to get in on these types of things, so you can really capitalize on the whole move and be more confident in holding because you've pinpointed a great entry on whatever you're trying to get. So as time goes on, right, you have your bases and break upwards, base and break, and then here's like a late stage one where you have another base and break to the to kind of this leading up to where we are now, which is this kind of extension that's being put in currently. Moving on. This is another example of those kind of base and breaks on just just an uptrend, right? So here, this is the whole cycle, right? This is down, extension, and back up. This is extension to extension. Whereas on this Solana example from, I want to say this was back in 2020, this is 2023. This is more so just looking at some different types of structures and kind of how we can identify them and where our best opportunities are. So, if you're coming into the chart, obviously getting in early is best. When you're just over these moving averages, you can see the 10, the 20, and the 50. They're all very close together. Price is moving sideways for the most part, and you don't have a whole lot of action going on down here, right? This is the point in the cycle where you have a few people going, hey, we might want to start paying attention to crypto again. In October, looks like things are starting to get a little bit better. But most people don't end up paying attention to this until end of December, early January, now into February, where we are now. So obviously identifying a cycle early is good, but how do you enter something like this if maybe you missed the beginning and you weren't able to get in, but you still want to find a good entry that can give you some explosive movement without really risking too much of your portfolio? Well, that's when you want to be paying attention to these kind of bases in the breakouts that can come from them. So my favorite is to kind of wait for price to, after it's extended away from its moving averages. Wait, can you guys see my cursor, by the way? Yep. All right, good. So you see how the price kind of extends away from those moving averages? That's these lines down here. So as soon as it starts to extend away, I try not to buy any time we're extended away from those moving averages. I think you're kind of buying into a little bit too much hype, and you can get caught in some nasty pullbacks if price wants to revert back to the mean, which is those moving averages. So what I do is I kind of let that play out, and you kind of gotta not let yourself get FOMO and stay the course and just say, okay, this might run up a little bit more, but this will give me a pullback opportunity. Because if you believe in, the run and in the cycle that you might be in, you have to believe that you'll get a pullback and you'll get an opportunity because nothing goes up forever. That being said, you wait for this price to kind of move sideways a little bit. And as soon as you get that retest of that moving average, that gives you a great opportunity because it does two things. One, it gives you an explosive opportunity where from there, generally price is more reactive since it's been moving sideways for so long. But also, that if price begins to fall below those moving averages, well, then you have an easy stop, right? You can just cut the position, and you don't have to worry about waiting on it or anything like that because I waited this thing for 5 days to consolidate and kind of move sideways, and it broke down, so I'm out of that position. But that gives you the greatest risk reward opportunity because generally, if you're in an uptrend, your upswing out of that little consolidation that we've established right here where it says basin break, that gives you a phenomenal risk reward, right? As soon as you get below those moving averages, that might be 1 or 2%. It might be $1 or $2 on this, which was $30 at the time, but your upswing is all the way up to 40. So you're giving yourself about a 1 to 10 risk reward there, which is really phenomenal. So as time goes on, right, let's say you missed that one and you weren't able to catch anything else. You do set up again, this time even longer, right? From the middle of November all the way into the end of November, you have another consolidation here where price is really just moving sideways and letting these moving averages catch up. And that's going to give you the best opportunity to get into an entry because if you get in and it breaks down below, and I mean, you guys know what crypto breakdown candles look like, right? If it breaks down, you're going to know it. You're going to see volume coming in along the bottom, and it's going to close pretty far down here, and it's not going to look great. But you can see here, it's just kind of riding those moving averages until it pops up, and this is a great entry. Because anywhere in here, you have those moving averages staying together, and we're going to talk more about this later on as well. We have those moving averages staying together, and price now becomes very reactive. You can see as it's popping through here, you've got a little bit of indecision, and then suddenly, it starts to get jumpy. It starts to get jumpy around the beginning of December, makes it a little bit of a pullback for any people that were late on in, and then, the lift off from there from about 60 to 75 or a 20% move. Julio, what are the moving averages? So that's going to be the 10, 20, and 50 are the ones I use. Okay, and then even if you weren't able to catch this one, right, after you've let these moving averages tighten, well, you get one more opportunity on this for the final push, or, in this image, you get one more for the push up, and that's going to be this flat consolidation, right? The more, the closer to 90 degrees that this kind of line is, usually the stronger the breakout. Like you can see on these, the line is kind of tilted downwards. You're at about like a 45, or not even a 45, you're like a 20-degree angle or a 30-degree angle here. That's great, and you can get some nice moves out of that. But when you have these kind of sideways pivots where something is just moving perfectly sideways like this, look how much stronger the breakout is there than say on this one where the angle is tilted more downwards, right, where that angle is a little bit lower. So that's something to pay attention to as you're analyzing a trend, right? If you have price moving perfectly sideways like this, generally this is a more advantageous entry opportunity than something like this where it's pulling back and down. Now you don't want it to be pulling upwards, right? If this were just kind of slowly going up, that's generally not a great entry point. But if you can get this nice sideways consolidation here, that really gives you a phenomenal opportunity. And you can even wait for the breakout on something like this to kind of validate what you thought you saw and give you a great entry. And it's not on these slides, but I'll talk about Ethereum. Um, I'll talk about my Ethereum entry that I posted in the chat a little while ago, and we'll discuss that as well. Moving on though, so this is kind of more examples of when price is coming back down in, and then how powerful it can be when you have multiple of these setups stacked on top of each other. So you can see here with BNB, you have this large move up in this is February, I want to say, of 2022, no, 2024. I think this might just be more recent. You have this kind of extension up here, right, where you probably have a lot of FOMO buyers stepping in. But again, you want to stay away from things that are just ripping face, right? If it's ripping face, you can assume that one of two things are going to happen. Either you're going to enter and you're going to get slaughtered, or you're going to wait for a pullback and you're going to get just as great of an entry opportunity if you think that, this is something that you want to be involved in, right? If BNB is a coin that you're like, yeah, this is something that I want to own in my portfolio because I think it'll come into rotation this cycle or whatever, it's more important to wait for those dip those dip or pullback opportunities than it is to just be buying as things are pumping up. So after this pump up, you can see this very clean triangle shape. And as it gets closer to the point of that triangle, it gets more and more reactive to these moving averages, and then inevitably popping up. Then from there, you kind of have it kind of sulk along these moving averages, just kind of round out this bottom, not break down any further, right? If you had entered anywhere in here, you'd still be, break even or slightly up. And then you get another pop out of there. And then from there, you get another kind of long consolidation on those moving averages. And this is where that patience really comes into play, because you have something moving strongly, right? It's evident that Binance at this point in time is something that has the potential to continue to move upwards. It's just a matter of not only being patient with your entries, but also recognizing that these things take time, and you're not going to be able to just buy something that's running really hot and just expect it to continue to go up forever. So you get that first kind of triangle wedge shape. Then you get that basin break like we talked about on the last few slides, and then you have this long kind of channel. These are great opportunities for entry. Any one of these is a phenomenal entry, and to see all three of them stacked up on top of each other is even something that I couldn't find an example for in stocks. So this is a really great entry. You're given good entries across this entire board here, and you can see the subsequent run. I mean, you're about 250 from the latest entry. You're about 250, 275 all the way to 625. So you're well over 100%, and you basically never have to worry about, if you pinpoint that proper entry, you never have to worry about being down on that position, right? Even if you caught this first wedge, you would have never gone lower from there. You would have just been kind of chopping around for a while as you waited for it to play out. And that's why it's so important to pinpoint those strong entries, because if you do it properly, you'll never experience periods of drawdown, and you know that your risk is so well managed because you've waited for that you've waited for that coin to pull back into those moving averages and really settle down before you want to take that opportunity and say, okay, at this point now, my risk to reward is secured, and I'm not putting myself in a position where I'm just buying something that everybody in the chat is going berserk about. So now this is a look of it of kind of how those moving averages come into play. This black line, the darkest black line, that's price. Instead of candles, I just made it a line so it was a little easier to visualize. And then these lighter gray lines, these are your moving averages. Like I said, the 10, 20, and 50. Notice how explosive the price is coming out of the moving averages being close to each other, when they're kind of sandwiched on top of each other. I have them highlighted in purple there so you can get a better understanding of what I'm talking about. But as you can see, the moving averages super tight to each other. Price right on top of it, 30% move out of there. Same thing here, right? Price is moving sideways, it's consolidating, 60% move from there. Here we go again, right? Price has been consolidating for a while. This is Litecoin, by the way. Price has been consolidating for a while. Moving averages sitting on top of each other, as you can see highlighted by that purple area, 122% move. As soon as that price starts to come back in, kind of makes a little bit of a flag. That moving average stack piles up again, right? The 10, 20, 50 all sitting right on top of each other. And you get a 70% move from there. So when you're using moving averages to trade, which I recommend because I think they make it a lot easier, when you have them kind of sitting on top of each other, resting nicely, to me that's like a coil, right? It's like when you take a rubber band and you twist it up. You know, the two ends of the rubber band, or I guess both sides of the rubber band, you kind of twist, 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 and as they coil up tighter and tighter and tighter, when you inevitably let that go, it unwinds very rapidly and very erratically. And that's exactly what you have here. You have price kind of unwinding or unfurling quickly as those moving averages do. So when you're looking for entries on anything really, I think if you're entering as close to those moving averages, and if you can get as many of them tightened up as they can, that's going to give you the best opportunities for risk reward on your entries, right? If you're just buying into the hype, yeah, you can do well over a long period of time if you're in something that's good and that you believe in. But if you really want to manage your portfolio in a way that's going to allow you to continually outperform, the people around you and outperform, just buying and holding, it's important to recognize these patterns and recognize that, hey, wait a minute, if I'm buying at these pivotal points, it gives me much better risk reward on all my positions, and ultimately that just allows me to be more confident in the positions that I'm taking. If I'm buying into, anything, crypto, stock, options, whatever, I want to be confident in my buys. I'm not just in there to buy and expect things to work out because, some guy on Twitter said it was going to. I need to be personally confident in that. And the way I do that is by justifying it through these pivotal points in the price action that allow me to enter at very lucrative risk reward positions. Let's move on. So, this is kind of how to analyze an uptrend. The last few examples have all been, things that are in an uptrend. Well, how do you manage something that's just kind of trading flat, that's not really giving you much? Well, that's when we're going to introduce support. So you can see here this gray box that I've drawn. That's what's called support, right? Price is being supported from that level. That's an area in which Bitcoin has had trouble kind of breaking down through, and it's really been very reactive from there. So if you're looking to get entries on something, support can be a great opportunity. If you enter close to that support, it gives you the best risk reward moving forward. You can see on all these labeled points highlighted in purple, right? You wait for this pullback. You've got 3 points of contact here already. That's what you're looking for. You're looking for 3 times where it touches this box. So that gives you a great opportunity there where you can go ahead and enter, and from there, you get a 30K to 60K bounce. As soon as it comes back in for number 2, right, you have another great opportunity there where you say, okay, well, it bounced there once before, so why wouldn't it bounce there again? You enter again, it comes back down for a third time. If you want to add more in there, there's another great time to add more, and then you get that nice move out again to the all-time high. So if you're looking to enter on something and you recognize that, hey, wait a minute, I'm starting to recognize a pattern here, which is price is being supported by this 30,000 level for whatever reason. If I enter here, that gives me a nice risk reward on this position. Because if you enter here, right, let's say you enter around right around that level, which is about 30,000, or I guess this is more so like 29,000. And it trades down and closes below. If you bought one coin, you're losing about $1,000 on that. But, your upside is significantly greater compared to that downside because you're entering so close to that support, right? The closer you are to your supports, the better your ads are going to be and the higher risk to reward that you're going to have. It all comes back to risk reward. You want to make sure that whatever you're risking, if you were to say, all right, I'm going to sell, whatever that number is in your head, you have to ensure that your reward is much greater than that. I look for like 1 to 4. And that was apparent here 3 times on Bitcoin. Now, on the 4th time, right, it comes in, and now here we have something different, right? On 1, 2, and 3, see how reactive it is? it comes in and it really smacks it hard and bounces off with a fair bit of force. Same thing with number 2, right? It comes in and it barely touches. It's very reactive to that price point. And then you have number 3, same thing. It comes in and it smacks right off and continues upward. But number 4 is interesting. It comes in, and now instead of getting that nice reactive bounce, well, now you have it just kind of hanging out here. That's not great, right? The more something hangs out on a support or a resistance, the more likely it is to break it. So you can see here on 1, 2, and 3, very supportive. It bounces cleanly off every time. But then over here on number 4, it just kind of dribbles around a little bit. To me, that's a very bad sign. And if you're somebody who likes to short crypto, that gives you a great opportunity. Because like I said, the longer something spends at a specific price level, the more likely it is to slip in the direction that it's going. So like here you can see it comes down from 48K all the way down to 29K. And then here we go. We kind of flag out, right? Price is just kind of hanging out sideways. And then it kind of trickles off. So if I were to utilize this support, I would definitely use it on 2 and 3. But once I recognized 4, I'd probably be more hesitant just because it's nowhere near as strong as it once was. And strength is really determined by how quickly it bounces off of something. The speed and velocity in which it bounces off at 2 and 3 are much different than how it does at 4. And then you can see exactly what happens from there. I'm going to grab a sip of water and just look at the chat real quick. Exactly, Sling. That's exactly it. Once you get towards the end, this is exactly when you should start to be thinking to yourself, ooh, you know what? This doesn't look as great anymore. We're not getting that nice reactive bounce that we were prior. You're exactly right. All right, let's take a look. Moving on. So now we have an example of support and resistance, right? Here we just have support. You've got Bitcoin coming into 29,000, finding that support multiple times. But what happens when a specific area is both resistance and support? Here we've got an example on Ethereum back in 2017. At the beginning of the chart, you can see price is really struggling to get over this 400 level. All right, it comes up into it, has a strong firm rejection, and then comes back into it again, strong firm rejection. And then on that third time, it goes right through it and then gives you these nice retests highlighted in purple here. Going back to that basin break that we were talking about, those retests of those moving averages, or in this case, those retests of that support, that's exactly what gives you the best entry points on something like this. So just because it's starting to break out and it looks really great, and even though it comes back down from there, I mean, from 480 down to 400, that's a pretty decent sized move. You know, that's, what's that, like 16% or 17%? So that's a pretty big drawdown. And a lot of people, I think, at that point would be like, oh no, like, you know, this is falling apart. But in reality, if you look back in history, you can see that this was a previous resistance and now it's become support. Old resistances become new supports. And you can see that both here in December of 2017, and you can also see it in April of 2018, where it comes back in, hangs out around this area, and then continues upwards. To me, that's a great sign of this area being very important going forward. And I would leave this on my chart, so if the price ever got back to this point, I'd be able to re-reference it and come back and say, oh, it's at 400 again. That has been a historically great point to buy. So I'm going to go ahead and get long at 400, I say get long, that's a stock term. I start to build a position around 400 or build ownership around 400 because I know historically that that's been a point where price has been reactive in the past. So is that making sense so far, seeing that support and that resistance? If it's not, just mention it and I'll give another example. Okay, so here's another example. I'm not waiting. I already have one ready. So here's another example, right, where you've got your resistance around 54 cents. This is SEI. This was recommended for me to chart. I've never traded SEI before, but somebody had recommended that I take a look at it, and it actually gave a decent example. So you can see it puts in these tops around $54 or 54 cents. Right, you've got this long wick, kind of the body of the candle to the, or excuse me, the wick of the candle to the upside. So there's like the first inclination of like, okay, this might be this might be resistance. Then it does it again the next day. You're like, all right, that might be something to pay attention to. And then it does it again, shortly thereafter. So again, you're like, okay, this is something that we should be paying attention to. Sure enough, a couple of days later, it pushes right through it, and then now notice, what is price doing? It's taken this resistance that before it couldn't get above. It couldn't get above this 54 cent level. But then as soon as it pushes through, well, now suddenly it can't go below. So what does that mean for somebody who's looking to get an entry on this? To me, this screams, well, I want to be buying this as close to 54 cents as possible because I know that it's having the most trouble getting through there. And if the history is to repeat itself, right, it's going to be reactive around this area to the upside. And sure enough, you get exactly that. So not only do you have the kind of base, you have the moving averages moving sideways, you have this old resistance now turned new support. This is like the jackpot entry right here. If I had seen something like this, I absolutely would have been looking to get long on this because you've got an old resistance turned to new support, giving you strong risk to reward here. Your moving averages are in alignment, and that gives you a nice clean break to the upside. I hope I'm not moving too fast, but I do just want to make sure that I get enough examples out there so you guys can really understand what's going on. So that's going to be it for the examples portion of the segment. I'm going to open it up to Q&A after this and talk about talk about some charts that maybe you guys want to see if you want me to take a look at what you guys are watching specifically. But again, right, just some closing notes. We're looking for tight price action on top of those moving averages. We're looking for falling wedges in channels to find low risk entry points. And we're also looking for setups early on in the cycle where we can able to move those stop losses up so we can always maintain a profitable position and really not take loss. So that's going to do it for the video that's going to go up on YouTube, and now I'm just going to open up the floor and take some questions.